Thursday, September 14th, market analysis, Stan Ehrlich. Good morning. I always start out with the indexes, usually the S&P 500, and I'll do the same this morning. And we do have a significant rally. Significant for a couple of important reasons here. First, we're up 375-ish on the S&P, very close to the high of the day, just made in the last half hour or so. We're up almost the same on the DIA, 3.5, and up 3 points on the Qs. 220 at the moment on the Russell. That's a fairly decent sized rally. And the important thing is, changing to my daily data chart for the spider, I have been talking about the head and shoulder top forming. And up until today, everything was going very nicely. And I did say that I do not want it to go up much further than the gap closure, which was at 449.17. Well, here we are at 50.30-ish, about the high of the day. That's not a lot higher than 49.17, but it certainly is not what I was looking for. I wasn't even particularly expecting the gap to be finished closing when we did some of it earlier in the week and started to come back down again. So looking more carefully at this head and shoulder, it's almost all there still correctly. I was expecting today we would be down challenging the lows of the last 2 or 3 weeks. Not true. Today we're now making a new high for the week, finished closing a gap, but we didn't stop rallying and we're still firm. We're still near the high of the day. You realize that this would be the second or third rather highest close and very close to the highest close for this last couple of months. That is not what I was expecting. The last shoulder high is now starting to get damaged, and I cannot escape the expectation of the October lows. So are we going to end up with something different? Maybe a double top, maybe no particular discernible top formation, and all of a sudden it just turns down into a big break into October. One way or the other, I'm still looking for an opportunity to be buying on a significant break in October, period, whether this formation works out or not. If we stop here and go right back down immediately, like today, and this is the high of the shoulder, it'll be about 3 or 4 days to the right or more time than I expected. The beginning of the week was perfect. It is a little higher than I would have expected also. So it's out of my comfort zone, but it's still a possible pattern that I will be talking about for a little while longer until it fails completely. And that certainly would be a close above 454, call it. That would not be expected at all. We'll see in the next couple of days, I'm sure. I expected this situation to be resolved by the end of the week, and I may very well be not the way I expected it, though. The DIA, same kind of situation, except, you know, if we closed right now on the DIA, we'd be at a new high closing price since August 15th for a whole month, basically. And that is not what I was expecting for a last shoulder. So the DIA is not cooperating very well either. I'm not abandoning the head and shoulder top completely, but I certainly am pulling in my bear fur a little bit. Okay, QQQs, also a new high for the week. There's no reason for it to come up here as far as gaps are concerned. Certainly there's still some resistance. All that is good, but you just got to start turning back down immediately to save this potential last shoulder. And the Russell 2000, same kind of story here. Not really doing anywhere near as much damage, and pretty much not any damage at all, because this shoulder could even rally for another day or two, all the way up maybe to the green resistance at 189, and not do any damage to the bigger formation. So A little bit more time and strength or weakness is going to tell the whole story. Let's go to futures. Now, as you would expect, the E-mini is doing the same thing as the SPY. We have a pretty good rally. It's a new high for a week and a fraction. Minor resistance above, needs to turn down immediately in order to save the pattern. Then I'm going to be talking about a head and shoulders top again. Right now, this is not what I was expecting. And let's go to NASDAQ, the daily data chart. Same kind of story. Pattern is still there, but we just didn't need this rally. That wasn't really expected. Doesn't kill it completely yet, but it's certainly throwing a little bit of a monkey wrench in. Next chart is bonds. Remember, I talked about if bonds go up, that would be bullish for the stock market. And it certainly is not correlating today. Bonds are down, but we had a bullish engulfing yesterday, and it is not uncommon for the market to come back into approximately the middle of the range and then turn right around and do what it's supposed to do with a bullish engulfing, go up. So this could be a buy. And if that's true, up, and that would be bullish for the stock market. But right now it's down while the market's up. So one of these is going to be wrong. Maybe both will fail and we're going to go lower in bonds, but I don't expect that. That would be bearish for stocks, usually. Next chart, 10-year notes. Yesterday did have a big bullish engulfing, but completely wiping out the last shoulder expectations. A new low for the trend down completely, but it didn't stay there. And we're back down into approximately the middle of yesterday's range. So this is where it might turn back up. We'll have finished this YouTube before that happens, if it's going to happen. So watch carefully as to what the interest rate futures and the stock market do from these levels that we're sitting at right now. And the spider is at 450.50, let's call it 450.50, a little more than 4 higher. Okay, next chart is crude oil. It's not stopping yet. We're overbought now for almost 2 weeks. Much larger rally than I was expecting. It looked like a few days ago it was topping out and ready to start to have a correction back to the red support area, which I still expect. But it won't stop rallying yet. I could get a bearish engulfing out of this if it would collapse and break below yesterday's low and then have a red bearish engulfing. I suppose much like those two during the 3 high days of that particular big rally back in June of 22, a little more than a year ago. So not going to be surprised if I get some kind of a big sell signal all of a sudden here, maybe just before the weekend. Same kind of comment for heating oil, overbought, right up against previous historical highs for the last couple of years and overbought. I think it's about to turn down for a pretty good correction. Next, natural gas hasn't even rallied as much so far as the previous several rallies since March, April of this year. So I'm not going to be surprised if we can still maybe get back up to that 3.030 level. Right now, you're a little higher in the day and you made a minor new high and it's coming up kind of slow. So after testing support and turning around and doing a decent job, plus we closed a gap. And even though it started dropping yesterday after the previous day's gap closure, it's the new high today again. I expected to get above 2.8 into the 2.9 and 3 area maybe. Next, gold. Not quite oversold, but almost. My low RSI today is 25.01. Holy moly, that's only 1,100th, that is, from the actual oversold levels. It's as close as you mathematically can get. I needed 25 or lower, so 1 tick off. If this closes higher, especially if it has an outside up day, I'll be talking about that as a bullish reversal. Not yet, though. It needs to get above yesterday's high. It won't turn green like the bottom day right there, August 21, but it's the closest I can get to it. But it hasn't happened yet. So support, yes. Trying to turn around, looks like it. Oversold, just so close. Next, silver. Oversold, in support, bouncing out of it really nicely. And it looks like that is going to be it. I think we reached the levels that I thought we would get down to from that sell signal only a week and a half ago. That's great. It looks like it's bouncing like crazy off of the same levels it did twice before. That's no surprise there. And all I really need here is a really good, strong close, hopefully higher on the day at a minimum. And if it got above yesterday's high, I'd have an official green ER buy signal, much like, in fact, the one that we had back on August 17th. That worked really great. All right, next chart. Platinum already had a bullish engulfing 2 days ago on Tuesday. I started screaming bloody murder. The next day we came down to the green dot. We're in an ER3 and ER1 long positions. The ER3 bought it yesterday at the green dot and now is profitable. We don't have any lower lows. Looks like we're going to have a firm close. I'd love to see it above Tuesday's high on a closing basis. And I think I'm about to get that in a day or two, and maybe even today, but very soon. So I'm looking for it to go back up and close that gap. And that would be up to about 968.5-ish. Yeah, let's call it 968. Next chart. Bullish engulfing at the bottom. Nice rally out of that for a couple of weeks. A retracement. No support tested. No oversold condition. And we're just simply bouncing back up again. It's a wide trading range. We're probably stuck for a little bit between 4 and 3.6. Next, soybeans. Didn't quite get to the support area. Closed on a strong note yesterday and did not get oversold. Not even all that badly. Just down to about 30 and change. And a little bit of a bounce today. I think we could still get to blue. And that would be coming down to 1311 or a little lower. The bottom of that area is terribly important. You don't want to close below that, or it's probably going to start to fall apart. If we see bullish type of price action occurring, if we can get to the blue zone, great. I would expect it to start to rally again. Right now, not too sure about the next couple of days, so keep my mouth shut. Next, longer term, it looks like it's neutral to bullish, but I need breakouts in order to be more adamant about that soybean comment. Bean oil, support tested yesterday, bounced right off of the red zone, got oversold in the process, popped back up nicely yesterday and holding its own today. I suppose this is pretty decent. It's going to rally back up to about 64.5. It's not that far away, probably in the next few days. Next chart. Soybean meal. No comment really, between a rock and a hard spot. Kind of neutral at the moment. Next, corn and wheat. Corn has made new lows, as I expected, but it hasn't yet broken that red line, which is a huge, important previous major low way over a year ago. So a little bounce here was no surprise. That would be yesterday, and today we're pretty much unchanged, but I do believe that we're going to see new lows below that red zone, below the 470 level, probably very soon. I would expect before the end of next week. And I thought we might do it this week, but that looks a little iffy at this point. Next chart is wheat. It's already done all that. Support was tested. It bounced off a little bit, broke it a few days later, came back up underneath it again, and then headed down to new low ground just 2 days ago. So got to be bearish in both cases, corn and wheat. Now what do we got for cattle? Overbought conditions again. New high ground completely for the bull market. We're stair-stepping our way up and up and up and up on cattle. Other than the overbought condition, which tells you you're probably about to have a downside retracement, a bit of a dip, Not necessarily a major top by any means, although it could be. And I don't see that. I see this pulling back to some support, maybe 186 and a half-ish, and then, maybe even a little lower, 183 and a half. But the trend is up, no doubt about it. No double top formation. All I can look at the moment is overbought conditions and the expectations of a bit of a dip. Now, I should mention that, today's high is almost exactly the same as the high back in July. So, there could be a double top if it were to go down immediately. Next chart. Hogs tested a resistance a couple of days ago, turned down yesterday, and today going a little bit lower, nothing much. I'm looking for a swing back down to probably 78 and maybe testing a little support at 75 and a half. I don't expect it to break above 85.6. Yeah, I'm looking for more of a downside dip here. Next, OJ just won't quit. This looks like it could be a new high for the whole trend, and very soon another new rally highest high, not just a new high close, I meant to say, close. Yes, we're at the same highs we saw twice before during the last couple of days. And if it were to start to break below 309, 308, different story. But I think it's going to hold. I see no trend change. The only big problem is the divergence that has brewed here. You've got no new highs in the indicator and a triple or quadruple at the moment divergence. But yes, we've had new highs now 3 times in the price. That's divergence. So look for some kind of reversal for a correction, but not necessarily a big top. Next is cocoa, overbought, looking for a correction. Same kind of bullish commentary in general. That's it. I'm bullish, but I'm looking for a correction first, probably back to approximately 3,600 and then back up again. Next, coffee, bullish engulfing today, right now. And just a second. Oh, okay. So coming out of a little support area. That's a little bit too much transparency for a second here. Let's do that. Oh, much too bright. Anyway, this is obviously a big support area. I didn't want it to be that yellow. Just a moment. Let's make it something like this. Much better. So, slight new highs last couple of days. Bullish engulfing today. Not oversold within a allotted number of past days in order to get a green bar, but super, super, super close. Only 3 days ago, RSI was down to 2680. So I need 25 or lower to turn things green for bullish engulfings like the exact previous low on August 18th, which so far could be turning into a double bottom formation at support. Definitely a possibility. Closing above 157.77 should cause an upside breakout, and the upside objective would be approximately the high of the yellow zone again. All right. Friendly on coffee at the moment because of the bullish engulfing today and the support holding and the possible mild, small, not very deep, not a real big deal, double bottom. Next chart. Sugar, the sweet. Overbought, trying to top out, doesn't seem to want to do it quite yet. This could be a new high closing price, not quite a new high ground, so there's still a chance it'll turn back down, but I need to just basically stay with a bullish stance because the trend is your friend and it's higher, and I don't see any reversals. And in fact, at the moment, we're not even overbought. Next chart is cotton, neutral, sideways. We're at resistance. We did get overbought. I think it's about to head back down again to probably at least 83.40 and maybe down to the bottom of the big sideways trading range again. No yet major bullish breakout. That would be a close above 90, but we haven't got it yet. We need to punch through that resistance if it's going to stay bullish. And that's it, ladies and gentlemen. You have a great day. Mañana.